$6,500 a month, just from owning stocks? Sounds too good to be true, right? Well, buckle up, because I'm about to crack open the vault of passive income and reveal the secrets of dividend investing. Welcome to my channel, where we provide different information about finance.
Where we turn dreams into streams of income. Today, we're diving into a topic that's key to building long-term wealth: passive income with dividend stocks. If you're new to investing, or if the term dividend stocks sounds like a financial jargon to you, don't worry. By the end of this video, you'll have a clear understanding of how dividend stocks can be a game changer in your journey towards financial freedom. Let's start by unraveling the basics. Dividend stocks are shares in companies that pay out a portion of their profits to shareholders regularly, typically every quarter. Think of it as receiving a paycheck for owning a piece of the company. These dividends provide a steady income stream, which can be a fantastic way to earn passive income. Now, why should you care about dividend stocks in 2024? The stock market has seen substantial growth, and companies are increasingly recognizing the importance of rewarding their investors. Moreover, with interest rates fluctuating, having a diverse portfolio that includes dividend stocks can offer some financial stability. The beauty of dividend investing is its simplicity. You invest in a stock, hold on to it, and reap the benefits of regular dividend payouts. It's like planting a tree and enjoying its fruits year after year. But, like any investment, it's not entirely without risks. So, let's talk strategy. First, look for companies with a strong history of paying dividends. These are typically well-established firms with a stable income. For instance, companies like Johnson & Johnson and Procter & Gamble have been consistent in paying dividends for decades. But how do you find these companies? Start with the S&P 500 Dividend Aristocrats Index, a list of companies that have increased their dividends for at least 25 consecutive years. Remember, a high dividend yield isn't always better. Sometimes it can be a red flag indicating the company is in trouble. Aim for a healthy balance between a decent yield and company stability. Moving on, let's talk about diversification. Don't put all your eggs in one basket. Spread your investments across different to mitigate risks. For example, investing in a mix of tech, healthcare, and consumer goods can balance your portfolio. Here's a tip for 2024. Keep an eye on sectors that are showing strong growth prospects. Renewable energy and technology are hot areas right now. Companies in these sectors might not have the highest dividends, but their growth potential can lead to increasing dividends in the future. If you're enjoying this video and finding the information helpful, don't forget to hit that subscribe button. We have a lot more content on passive income and smart investing coming your way. Alright, let's talk about how to start. You can buy dividend stocks through any brokerage account. Platforms like Fidelity, Charles Schwab, and Robinhood offer easy access to the stock market with user-friendly interfaces, perfect for beginners. And the best part? You can start with a small amount. There's no need to wait until you have a large sum of money. Even investing a little consistently can go a long way. Now, let's address a common question. How much income can you expect from dividend stocks? It varies, but let's do some quick math. Suppose you invest $10,000 in a stock with a 3% dividend yield. Annually, you'd earn $300 in dividends. Not a fortune, but remember, it's passive. You earn this without any active effort, and it can compound over time as you reinvest these dividends. For those looking to expand beyond individual stocks, consider dividend ETFs. ETFs like the Vanguard High Dividend Yield ETF or the iShares Select Dividend ETF offer a diversified portfolio of high-yielding stocks. These are great for investors who prefer a more hands-off approach. As we approach 2024, keep an eye on economic trends and adjust your strategy accordingly. The investment world is dynamic, and what works today might need tweaking tomorrow. Remember, investing is a marathon, not a sprint. The goal with dividend stocks is to build a steady stream of income over time. It's about financial resilience and patience. Investing in dividend stocks isn't just about picking any company that pays dividends. It's crucial to understand the financial health of these companies. Look at their dividend payout ratio, which is the percentage of earnings paid out as dividends. Ideally, this ratio should be sustainable, not too high, that the company is paying out all its earnings, leaving nothing for future growth or emergency funds. Another aspect to consider is the company's earnings growth. Steady earnings growth often translates into steady dividend growth, making these stocks attractive for long-term investment. Take, for example, the tech giant Apple. Despite being a technology company, it has shown consistent dividend growth over the past few years. This is a sign of a healthy, growing company that's sharing its success with its shareholders. But here's a pro tip for 2024. Don't just look at US-based companies. Expanding your horizon globally can uncover some fantastic dividend-paying stocks. International markets, especially emerging economies, can offer exciting opportunities. Companies in regions like Southeast Asia, Eastern Europe, and Latin America are increasingly becoming dividend payers, contributing to a diverse global portfolio. Now, let's address a key question. How do taxes affect your dividend income? It's important to know that dividends are typically taxed. In the US, the rate depends on whether they are qualified or non-qualified dividends. Qualified dividends are taxed at a lower capital gains rate, whereas non-qualified dividends are taxed as ordinary income. Make sure to consult with a tax professional to understand how this impacts your investment returns. As we move towards 2024, staying informed about market trends and economic indicators is crucial. For example, in a rising interest rate environment, high dividend-yielding stocks can become less attractive compared to safer assets like bonds. Always keep an eye on the broader economic landscape and be ready to adjust your portfolio accordingly. Now, let's delve into some practical steps to get started. To invest in dividend stocks, you need a brokerage account. For beginners, I recommend starting with platforms like E-Trade or TD Ameritrade. These platforms offer extensive educational resources that are invaluable for beginners. They provide research tools, investment calculators, and even mock trading environments to practice without risking your money. For those who prefer a more guided approach, robo-advisors like Betterment or Wealthfront can be great options. These platforms use algorithms to build and manage your investment portfolio based on your financial goals and risk tolerance. They can automatically reinvest your dividends, helping your portfolio to grow. Let's do another quick calculation. Say you start with an investment of $5,000 in dividend stocks with an average yield of 4%. In the first year, you'd earn around $200 in dividends. If you reinvest these dividends, your investment grows, and so does your potential dividend income for the next year. Over time, this compounding effect can significantly boost your investment value. But remember, the key to success in dividend investing is consistency and patience. It's not about making quick money.
No.
It's about building a reliable income stream for your future. Regularly investing, reinvesting dividends, and staying invested over the long term are crucial steps. As we wrap up, let's recap what we've covered. Dividend stocks can be a great way to generate passive income. By selecting the right stocks, diversifying your portfolio, understanding the financials, and staying informed about market trends, you can set yourself up for long-term success. And there you have it. That's our comprehensive guide to passive income with dividend stocks. If you found this video helpful, give it a like and hit that subscribe button for more content on smart investing and building streams of income. Remember, at Passive Money, we turn dreams into streams of income.